All right, so today's video is going to be a little shorter than normal. I do have my second son's graduating from high school here later this evening, so I'm going to be heading out here earlier. So I wanted to make sure I got this video posted for everybody to see. So it's a little truncated, shorter than normal, but I think that's there's not really a whole lot for me to discuss than what we saw on Monday, because the market hasn't really changed very much from Monday's video or from last Friday's for that matter. But we're going to take a look at what's driving that. There was some pretty significant move in other asset classes today. We'll talk about what and how that jives with our expectations, what our near-term expectations are. There is one indicator that I haven't shown you before that shows that there's an opportunity for a spike in volatility coming up. I'm going to show you what that is and how significant it is, and other instances where we've seen it this way, and what we can expect and how that aligns with our expectations. Then our trade idea is a stock that's been kind of in this bearish trend, basing, and had a signal that, a bullish signal today, a short term kind of early signal, bullish reversal signal. We'll talk about how to trade that. So let's go ahead and get started. Today is Wednesday, May the 25th, 2022. This is the market outlook from marketscholars.com. My name is David Settle. All right, well, let's take a quick look here at the S&P 500 with the market forecast indicator. And you can see the nice little rally today, closing above yesterday's close, and not quite up above Monday's close, but closing above the body, closing above the hammer that we got last Friday. So a good sign there. The near-term line dropped, but still easily in the upper reversal zones or in bullish territory. So nothing really to worry about. I think we're going to get, I tweeted out today, and again, for those who follow me on Twitter here, I'm at David Settle 42. Just follow me there. There's a lot of fake accounts that they'll make of me, so make sure it's right, David Settle 42. But I tweeted out this idea that this near-term line that we're getting right now, this near-term low point, is probably the least bearish out of the last four that we've had. And you notice, like these other ones, every time we got to the pretty deep low there and another deep low, not so deep this time, not as low, not as much of a lower low, and then you had a cluster in there and you had a hammer pattern. So that's actually a pretty decently bullish low point if from a bearish perspective. So again, lends some credibility, some idea, it lends some support to the idea that we'll probably rally here in the near term, again towards the 30-day moving average up into Fibonacci resistance areas now. You can see that was such a strong support level previously that we tried and ultimately broke through and stayed down below now. It's going to act as a resistance to the upside. So it appears to be what we're seeing. You see that on the S&P 500. You also see that in the NASDAQ and the Russell 2000 as well, right? So nice, good bullish move, a little bit of a cluster there, or engulfing pattern on the Russell 2000 with the near-term line in bullish territory. One thing you don't see is the near-term line at really good bullish levels, so keep that in mind. We're not as bullish as we'd like to be. If you can get above 90, that'd be great, but this being in bullish territory is better than what we've been seeing. So we have that working in our favor right now. From a long-term perspective, remember the week's not over with, so we have to keep that in mind. But a much smaller range on the candle than what we saw. This isn't a reversal pattern, but it's definitely a slowing down pattern that you expect to see going into a reversal, a transition. So I would not be surprised, because we're going to open up next week right around 39.91. We're trading at 39.78. So we're gonna most likely get a transition candle next week. Obviously, you don't have the green arrow here, so we're pretty far away from that. And the PPO is still falling, so and the differential is still negative. But at least it appears that we're kind of trying to form a low point. You can see that as well on the three green arrow charts. We don't have any three red arrows anywhere now. We're all light. We're not light green. We don't have the green shading yet. We don't have three green arrows, and you have to get multiple days worth in a row, not just one day. But at least we're not pink anymore. So we've kind of stalled the decline. When you look at the two-line version, we're not above the 17-day. We are converging. The MACD is above its moving average down here, but we're not above the 17-day yet. That's when you're really bullish, right? When the MACD is above its moving average, it's rising, ideally above zero, but at least it's above its moving average and rising, and you're above the 17-day. So we're above the 8-day. We're not quite above the 17-day yet, but we're getting better. Looking at some of these other oscillators, You know, we're still above 25 in the negative, still well below 20 on the positive. So we haven't changed the trend, nor do I think that we will change the trend. But at least we're not in bearish levels, and that's, you know, a key theme you can see across a lot of these indicators. Still got a very strong bearish trend, but like I said, I think we're kind of moderating the trend. We're not in the lower quartile anymore. We're in the middle quartile. That bandwidth is falling, expected to continue to fall as we kind of just trend sideways. I think we'll probably go up and then back down by the time we get to the June expiration date. When you look at the volatility index, you can see it's still really low. Like volatility, when you look at volatility relative to a few factors, when you look at volatility relative to where the ATR is as a percentage of the price, right? Then when we're at this level, the VIX is usually in the 30s, high 30s, low 40s. So the VIX is really low right now. And the other factor too is when historical volatility is this high, that's a sizable gap between the two. It's not very common for us to get that. Usually either historical volatility drops sharply or implied volatility is usually a lot higher. And that's the case. When the historical is this high, implied volatility is usually a lot higher than that. And that's not the case now. So the VIX is really, really low. So don't expect a big moves, right? You can see the VIX is dropping. We're going to get smaller bars. So we're not going to get a big 3% or 4% rally, most likely. We're probably just going to grind higher with 1% to 2% rallies, or smaller, with small losses too, as we move up on this current near-term run up towards resistance. But you also notice too, and we talked about this in our class today, that not only is the VIX low, but the VVIX is really low too. In fact, the volatility of the VIX hit its lowest level of the year, right? It hit a 52-week low. And when it gets to these really low levels, let's go to this chart here. When the VVIX gets to these really low levels like this, and let's go out 5 years for some context. You can see we did in early April of 2021. You can see we did at the end of September in 2020. Those are other periods where we got about this low point below 100 on the VVIX. Well, when you look at those periods, so again, early April of last year and the end of September, in 2020. So here's the end of September. You can see, it's actually right here, we rallied up in the VIX and we went up to 105%. And the same thing over here, we had a run up in early April on the VIX. And so we're consolidating, but not at low levels like these. We're actually consolidating at a high level, and the expectation is we might go up. And so again, we might continue to consolidate while the market's on this little near-term rally. But I think our next leg lower could very well be the leg that gets us up into the 40s, high 30s, low 40s, and we finally do get up above 105 to 115, 125% areas. That might be the leg that actually does capitulate, because the VIX right now is just hardly capitulating in the least bit, and we see why. If you take a look at today's intraday range, you can see that higher high and higher low, and we close above the high. So a bullish day for the first time in a while. So we'll probably get some more of these going into the end of this week, early part of next week. So before we finish it, we start a new leg down, and we finish this correction that we're on right now. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts or indicators are you looking at that would suggest why you're either a lot more bullish than I am or a lot more bearish than I am? All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. One, you liked our video today, and two, that you want us to do another video again tomorrow. That helps us out because it gets our video out to more of our YouTube subscribers, based on how their algorithms work. That's why we always ask for the likes, and we appreciate those who do that for us. You can do that right now while you're watching. Also, while you're down there, comment. What did you get out of the videos today? What stood out to you? What questions or comments do you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content between the videos from day to day. There's my handle at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, check out some of these things on the right. Click on this icon that takes you to our Market Outlook Live page, this page here. This is on Monday, Wednesday, and Fridays at 3:30 Eastern Time, right before the market closes. I can do a quick 10-15 minute video. I take a look at all the trades we've done in other Market Outlook videos to see whether we should stay in them or get out of them. We actually got out of a couple today, turned one of them into a different trade. So make sure you check that. If you want to see how to manage these ideas I give you at the end of the video, this is where we do that. We also already put on today's trade that you'll hear again at the end of the video before the market close. We did it during this live video as well. You can see, you also get to it by clicking on live trade review in our main menu. If you come down here, you can see our upcoming classes. Click on view more, it takes you to our calendar. Here's all of our upcoming classes for the rest of the month. You can see all the recordings we've had going back 4 years worth of recordings. So lots of content on this video on our website. Come down here to the bottom, click on that heart. It opens up this tab, hit that like button. Same thing with this thumbs up icon, click on that. It opens up this tab, hit that like button. Again, the more you do that, then we can get I have a lot more than 36 people who follow me on Facebook and however many on Twitter. So the more you click on the likes and you share, that helps us get our content out to more of our followers. We really appreciate that. It also benefits you because Twitter and Facebook promote content in your timelines from the accounts that you engage with the most. So to make sure you're always getting our content, engage with us, and we try to make it really easy for you to do that right here. All right, now let's take a quick look at what's driving the price action. You can see over the last 3 months has been commodities and the dollar, but let's look at today alone. So let's just go to May 25th. Just look at the last couple, this is the last day. And you can see small cap stocks really rally. In fact, they're outperforming the Qs to the upside, and I expect that will actually continue to be the case. The dollar was up today after kind of a down period, and so were bonds. So the bonds and the dollar, but gold was down. In fact, gold was the only asset class that was on the downside. Let's take a look at some of those price movements, especially in that US dollar. Remember, really what we've been paying the most attention to from a dollar standpoint is a dollar-yen currency pair, because that's your safe haven trade, right? The yen is a safe haven currency. And it's still, it went up today, but not very much, and it's still in risk off mode. This would be risk off mode for the dollar versus the yen. And it's just now getting there, right? As we saw, and you can see the euro versus the dollar is also changing course, and it's been so bearish for so long. As of right now, it appears to be peaking at the 50-day moving average. I don't expect that will be the case. So I think, there's opportunity for more strength in the dollar. There's opportunity for more strength in bonds. I mean, bonds have been converging for so long. We're finally above the 17-day moving average and really diverging to the upside now. The stochastics is in the reversal zone for the first time. I mean, when you look at like this chart here, I've shown you this chart before, and I talked about how, for SPY, this is a really good sign. Like to be above the orange line and get it rising again. I think it's a reversal sign. In addition to what I tweeted out to you about the whole moving average, you can see it's finally turned green. So, and we're rising up there. So there's some signs here that we're turning up on a near-term basis that we haven't had for a while. But when I look back at here and I look at the same chart but on bonds, you can see now we're really bullish. Like we had been down in this very oversold level, but now we are potentially moving up in the upper reversal zone for the first time in a while since this bullish run. So very good opportunity that we haven't seen for bonds in quite some time. So I think bonds are probably setting a low point and setting an opportunity up for an extended move. You saw the move on the daily chart, but when you look at the weekly version of this, you can see the reversal, right? We're closing above the highs of these the piercing line of the highs of these piercing line pattern that we got. The MACD histogram and the MACD itself is rolled up. And we're still well below these moving averages, but we're going to start converging. The MACD is going to get above its moving average, before the price gets above its 17, and then it takes off. Well, this is the stage it appears like that we're in right now at the bottom of this value area here. Let's take one quick look here at the sector moves. And we'll just drop down to, again, just today alone. And you can see the sector moves, discretionary bounced up big time. Remember, they've been down quite a bit. Energy is still bullish. XLC has been down quite a bit. It bounced up in XLK. So there's your big winners. There's your safety trades lagging behind. So if I go back out to the week that was here this past week, you can see why XLY and XLC rebounded as much as they were the biggest losers. So they rebounded today, coming off of some pretty significant low points yesterday. Energy is maintaining some relative strength, which is, again, kind of a typical sign of a late secular bullish stage. Very similar to what you saw in 2007 into 2008 during that correction period. For energy to be really doing well during this particular correction period kind of says a lot. While we've been in this correction really started for the S&P right here. Let's change that to a daily chart. This is when it really started for the S&P, and look at energy during this correction. So like 20, 23, 26, 32, and energy is up 50%. So it goes to show that this correction we're on could very well be the correction that's very typical of a pattern of a correction that starts at the bear market. If I were to go back, I don't know how far back we can get on here. But if I were to come out here and then go out to, let's change the date on this, out to 2006, and we'll stick to a daily chart. Come way out here. So you can see the correction really started, here let's go to a weekly basis, weekly chart. The correction really started back in here in October 8th, 2007, and then we eventually bottomed out there March the 17th. So again, that was October the 8th. Really, it was October the 15th. But let's go October the 8th to, what do we say, to March the 17th. And we'll come over here, October the 8th of 2007 to March 17th, 2008. Okay, and you can see that correction there. Financials really struggling. XLK, XLY down. XLC wasn't built into there, right down 20%. And there's your safety trades, and look at energy. It wasn't up 50% because it wasn't down as much, but it was clearly outpacing. And for a lot of this correction was actually bullish, right along with utilities and staples. Very typical behavior of a correction that ultimately, after a bounce, leads to a bear market. So a good opportunity of that. And it takes months, right? That was March of 08. The bear market really didn't start till June of 08. And then things hit the fan in September, October. So it will take months for something like that to happen. But you can see very similar pattern to what we're seeing now in terms of what was really weak during that correction and what wasn't, and compared to what we're seeing right now. All right, so for our trade idea of the day, I want to take a look at Schwab. Schwab has been pretty bearish. Really good day today. Engulfing pattern, near-term lines in bullish territory. The intermediate line was so bearish. It's finally getting outside of that 10th percentile. We're getting back above the 10th percentile. You can see that we're getting closer to the moving average. We had really bearish signals here, very similar to the S&P, but now not so much. You can see they're converging on each other again there. The Bollinger Bands, when you look at it, the Bollinger Band width has been declining, so we've really been kind of basing here on this chart. If you look at this chart, you can see at one point today you can see the engulfing. At one point today, we were actually above that 17-day. Actually, when we made this trade in the Market Outlook Live video, it was above that. So you can see the bulls are there, really ready to push this up. The stochastics is turning up. The MACD has been converging for a while, and finally appears to be starting to diverge to the upside. Good signs all across the board, but big resistance above us. And the question is, how much? Sorry, I hit the Netflix ad in my email here on my other screen. How much it will actually get up to? And so what we decided to do is say, okay, well, let's buy the at-the-money strike, which is, with this at the time, this was the at-the-money strike, the 66.5. Now it would be the 66, and then sell 2 strikes away. So we end up getting about a 1-to-1 reward to risk ratio. So for half my normal risk, I'm getting a little bit better return. It'll be about 1.5 times my normal return for a bull put spread. And again, I don't need to go up very much. So, and I'm worried about the catching the falling knife. So I want to reduce my risk. I don't have to worry about $1,000 loss in a worst case scenario, and I can get a little bit better return if it goes up a little bit more to the upside. And it doesn't have to go up as long as it goes up above the 60. 8.5. As long as it gets above the 68.5, then I'm fine. So that's about right into this area. It gets above the 30-day moving average, which you can see they've been converging, and you expect that we'll probably make a run up there towards with the MACD histogram rising and the MACD itself rising too. All right, well, that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread. And let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video below. You can also subscribe to us at marketscholars.com for free. Join our website and like us on Twitter and Facebook too. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.